What's up, mortgage coach community? Dave Savage. And today I'm having another mortgage strategy interview with Dan Keller. What's up, Dan?
Good morning, Dave.
Good morning, brother. So I did my first mortgage strategy interview with Dan. So this is part of the series. And what I'm trying to do is help local loan officers do more than just have transactional conversations, rates and fees, but ask a family what's your hopes, dreams, and your goals, and then deliver tangible advice that has value. Get them to think about things differently than they had thought about things. So Dan did that first one, and I figured, it would be weeks, months before we do another one. But then, Dan, you had to do it. You had to go and post an incredible story and strategy on Facebook, and I'm like, we've got to do another one. So Dan, why don't you just tell everybody a little bit about the story and the post, and then let's pull out the total cost analysis and walk them through how you brought advice and value to this family.
Yeah, I mean, right now when the market's really great and business is just burning and turning, you kind of lose sight of why we're here, what we do, and kind of the why behind it. And I was on a coaching call about a month ago, and I was just I felt like I was going through the motions. And then my numbers are really great, and we're having great months over and over, but I'm hearing all this negative news about compression and volume dropping, and the opposite's happening in my business right now. And so I was kind of ignoring it. And then I don't know what happened. It was about a month ago where I just I wasn't losing interest, but I wasn't getting excited like I used to for mortgage planning meetings and for meeting new clients. And I was just found myself taking calls over the phone instead of getting face to face. And over a couple of calls from you with Jeremy Forcier and a couple of other people, I kind of got kicked in the rear end again, and really needed to put some pressure on myself to up my game in regards to my one-on-one meetings. And as we're starting to see a little bit of a change in the environment, I wanted to put more focus on adding more value in my meetings. And as a branch manager, I'm trying to coach my loan officers on converting at a higher level. And so I really started going back to basics, what I normally do in a detailed mortgage planning meeting. And I'll tell you what, over the last couple of weeks, I'm seeing that shift in the Seattle market. I'm seeing a little bit less applications coming through. So you got that fear in the back of my mind that everyone's talking about compression, how it wasn't happening. And now I'm starting to see some of those changes. It kind of got me fired back up, maybe the fear of loss, to go back in there and just pay extra special attention to my clients. I'm preaching right now to fall in love with your leads. And so, I had an opportunity to meet a client over the weekend, got jacked up to take time out of a Saturday morning to go sit down with a family. They're selling their house and buying another house. And I just posted something on Facebook where the realtor called me in advance and said, Dan, I've got some clients here that I have a feeling they're making a bad decision if they don't buy this house. It's everything they want. It's in the area, but they're caught up on negotiations. They think they can get a deal $50,000 under value. And he was like, the market's just not there right now. The market's still hot up here. And he said, I need your help showing them the numbers. I need your help helping convert these guys because it's the right choice for them. So I sit down with them on Saturday morning, and that's kind of what I posted on Facebook, Dave, is kind of the process that I took them through. But part of, I think, what we need to do right now is we need to ask better questions. One, we need to ask better questions. And then number two, I learned this from Jeremy Forcier. Oh gosh, who was the author that you had on? Tim Sanders. Ask why 3 to 4 times. And so I'm asking why more, or tell me more about that. And so I had this meeting with the clients. They were literally hung up over $20,000 in negotiations. And so really, I started off the interview. Tell me more about by the way, your approval. You're fully underwritten and TBD approved. Everything's good. We're going to get to your pre-approval in a minute. But tell me about this house. Tell me about your current situation. I want to know more about your financial picture, where you guys are at right now, where your kids are at, why you're wanting to buy this house. And they put the focus on their kids and schooling and this and that for the next 7 years. And I said, well, tell me how that looks over the next 7 years. Tell me about your financial situation, investment-wise. And then at what age, this is the key question that I've been asking that really gets people to stop in their tracks and takes the focus off a mortgage. At what age do you see yourself retiring? And with this particular couple, the wife looks at the husband looks at the wife, and they're like, I don't know. And I said, well, what would it take for that to happen? And they're like, I don't know. And I said, well, let's talk about that, because this is important. You're 38 and 42 years of age. I'm 42. I'm thinking about it all the time because it's going to happen like tomorrow. And next thing you know, we're talking about life insurance, and I'm walking them through, do you have coverage? You've got 3 kids. Do you have the proper coverage? No, we don't. Do you have a will? No, we don't. They don't even know what kind of automobile coverage they have, home insurance coverage, the options out there. And so I was able then to take the focus off of that, put it on some things that are really important, but then bring it back full circle in regards to budget, Dave. And that's where at the end of the day, they were literally $10,000 off. So there's a $20,000 gap. And they were able to negotiate in the middle. But I asked the wife this very important question, 2 things. Name 5 things you absolutely love about this house and 5 things that you absolutely don't like about it. Well, 5 things that they loved, she listed that. There was only 1 negative, and it had something to do with location to the school, which wasn't a bad negative. It was still in the school district. And then I said, all right, tell me 5 things you love about your current house and 5 things you hate about your current house. And she listed 5 things that they dislike about their current house. And I said, on paper, you guys, this looks like it's a no-brainer. Are you willing, and then I pulled up the TCA, and I said, are you willing to lose out on this house over $43 a month in mortgage payments? And they're like, well, what do you mean? And I said,
Dan, time out. I want to do 2 things. One, I want you to pull up the TCA because, and everybody, I want you to think about this. So Dan asked questions, had a non-technical conversation, connected with them, was present, asked great questions, got to the core of it, and then at some point lays out the total cost analysis, make sure they're clear on the numbers. So Dan, if you could just walk through that, because one of the things I'm trying to help our community with right now is it's go from transactional rate and fee loan officer to strategy loan officer. And so I want them to just kind of feel like what it's like to walk through the numbers. So could you, 2 things, when did you actually start walking them through the TCA? And then 2, walk us through it so that we all get to the same punchline and we all learn how to deliver better advice.
Yeah, so the TCA came after I built some rapport and actually laid the groundwork for them looking at me as an advisor. And so by asking those questions about their financial situation, going over with them my 6 steps to financial freedom packet, which has a lot of focus on budgeting, and really finding out why they want to buy this $630,000 house where they currently have a house that's worth about $380,000. And so they really wanted to upgrade. They wanted to upgrade area. They wanted to upgrade the size of the house because they've got 2 more kids from when they originally purchased this house. So once I found out the why behind this move, then I kind of said, well, tell me about the current situation. The house was listed at $680,000. It was not marketed right. It was not listed right. And they did a price reduction to $640,000. And my clients came in and they offered $600,000. And I said, how do you feel about that offer? Do you think the house is worth $600,000? And they said, well, I think it'd be a great deal if we got it for $600,000. But I said, can I give you my professional opinion right now that in this market, you're kind of offering your mindset right now is off. We're not in a declining market like this. So you're not going to get this house for $600,000, right? And the wife was really hung up on a $2,350 a month mortgage payment without escrows or less. And so I said, okay, so that's why you're looking for a $600 or $600,000 purchase price. She said, yeah. And I said, well, you understand that you're going to end up buying this house for anywhere between $622,000 and probably $627,000. And she was like, what do you mean? And I told her from experience and just kind of where the market's at. So I said, you need to be in that $620,000 to $630,000 price point. Well, the payment's too high. We don't like the payment. And so I said, well, here's the thing. I actually created this or upgraded this TCA right in front of them. And I put $600,000, $610,000, $620,000, and $630,000 next to each other. So when they had offered $600,000, the seller came back at $640,000. And I said, you still have a chance. They're lobbying back and forth. You still have a chance to negotiate here. And I said, what you come back with, you have to understand what you come back with right now is going to be key. Don't come back with 610, come back with something that's fair. And so I armed them with the information to go back. They went back at 620, and there was a counter offer that over the week, or excuse me, on Monday, they reached mutual acceptance at 625. So exactly what I told them where they'd probably be on this. So what I did, they didn't want to pay a penny over 620, and they were going to have to pay some points to buy down the rate. So what I did is I showed them at 630, if they paid discount points to buy down the rate to 4.5, put down a little bit more money, that they'd be right in that 2350 price point, and she was okay with that. And so I came into the TCA, I brought the TCA into motion when we started talking about their motivation. Her motivation was $2,300 a month, monthly payment. And I said, all right, so are you willing to lose this house over $10,000? We've listed all the pros. We listed all the cons of their current situation. And I think just providing some clarity with these numbers along with their emotions, they left the meeting with absolute clarity. They knew what they were going to go talk to their agent about. And they won. They got mutual acceptance on Monday at 6.25.
Love it. And so, guys, here's what he did. And if you look at the lead conversion playbook, which I'm going to put a link down below to, I'm also going to put a link down below to the Jeremy Forcier and the interview that he talked about with Tim. So down below that interview, incredible conversations. But here's what he did. Strategy number 4 and 5 already had the hopes and dreams conversations. He made sure they understood the home that they were buying, you know, how it aligned with their dreams, how it aligned with their goals. And then he put options in front of it so they could see these options. And again, what'd you do? You helped the client go from confusion to clarity. Probably didn't hurt that you met him on a weekend. Probably didn't hurt that you provided an unparalleled level of transparency, so you had their trust. And it probably didn't hurt that you were more than just a loan officer, which, by the way, is like strategy number 4, which is, you know, where it's like, hey, I'm going to help you get a good loan, and then I'm going to help you manage that mortgage. The fact that you were asking them advice about budget, the fact that you probably referred them to a trust attorney, and you probably had a conversation on insurance. So you were more than just a rate and fee transactional loan officer. You showed up as a trusted advisor. You showed up as someone who was not only interested in the transaction, but interested in them building wealth with real estate and having financial well-being.
Yeah.
And I'm sure that all of those things came together. So community, down below, like you're watching this on YouTube, there'll be a link describing this video. So there'll be a little description. There'll be a link to Dan Keller's total cost analysis. So you can click on it. You can see the educational experience that he delivered to those families. And like I said, there'll also be a link to the lead conversion playbook, the interview from Jeremy that helped inspire Dan to get after it, you know, to meet with more people in person. Dan, any last thoughts before we wrap up this mortgage strategy interview?
Yeah, over the weekend after I posted this, a lot of loan officers across the country and locally private messaged me for that mortgage planning guide that I use. So if you go to my website, it's mymortgageguy.dan.com/apply. This is the link that I send everyone to. You can see how I run people through the pre-approval process as well. But the concierge packet, which is step 2, if you click on that, it's a PDF. You'll see my mortgage planning guide. Feel free to copy it, swipe it. I had a professional design it for me, so don't ask me for the publisher, the Word version, but just create your own if you'd like. But yeah, I mean, that's the best value I can give back to the community is invest in your leads, meet face-to-face, dig deeper, talk about things other than a mortgage. I mean, these people left, Dave, with an intro to an insurance professional that I recommend, an introduction to my financial planner, and my life real estate attorney, my estate attorney. So, you know, I mean, they left with a lot of value. And then the big thing is the real estate agent called me on Friday night, letting me know the issues that they are having negotiating. It was a big win for the realtor partner. I mean, now they go back to the real estate agent, talking to them about our meeting. I look like a hero to the realtor.
Love that. So by the way, he helped push a fence sitter off the fence
Yep.
into escrow. They're better off. Everybody's better off. So hopefully you got value. If you got value, give us a like, share it with your mortgage friends. Also, highly recommend that you follow Dan on social. This is a super cool post. We actually took it and reposted it on our Instagram page. So if you go to Mortgage Coach on Instagram, our most recent picture is Dan prepping for this Saturday meeting at a coffee shop with the family. So by the way, Dan, I also love, not only did you have this great advice-based experience, you did a great job of telling the story on social in a way that, provided great leadership to your community. So total trifecta value, brother. Really appreciate you, man.
Yep. You got it, man.
Take care, everybody. Hope you got a lot of value from this.